Today is April 15th, 2016, and this is the ADM Investor Services Weekly Market Wrap-Up. The guests today are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. Remember, the views and opinions expressed by our guests are solely the opinions of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Alan, yesterday the S&P 500 futures and Dow futures advanced to new highs for the year. You have been bullish despite early weakness in 2016. Are you still committed to the long side, and what is your outlook for stocks moving forward?
Well, we are absolutely committed to the long side of the stock index futures markets. The reason is that interest rates, we believe, will stay low for a very long period of time. We believe that the Fed will remain overall accommodative. We are starting to see better numbers from China, and we are starting to see industrial commodities advance in price. So all of this is coming together, indicating that the bull market is still intact for the indices, and I would expect higher prices for the balance of this year at least.
Steve, there seems to be a pulse in the grain markets after a quiet beginning to 2016. Soybeans rallied again this week and open interest is record high. Why?
I think initially we're seeing that new old money is coming into the marketplace. It started probably when the dollar broke and crude rallied, and traders decided to get into other physical commodities. We also have some weather issues in South America. It's too dry in Brazil, too wet in Argentina, and we have some political issues in Brazil that it's helped rally the Brazil currency. So in general, we're seeing more money coming into the markets we haven't seen in a long time.
Speaking of weather, it feels like spring here in Chicago. Over the next 2 weeks, farmers could plant half the 2016 crop. How will this impact corn prices particularly?
Good news and bad news. I mean, I think that the good news is that historically, if you plant the crop early, you get higher yields than normal. The bad news is this week we've got a series of private weather forecasts that suggest that as we switch to La Nina, July and August, especially in the Dakotas, Minnesota, Nebraska, and northern Iowa, might be warmer and drier than normal. So that's all causing funds to cover some of the shorts in the corn market.
Alan, shifting back to financials, yesterday Atlanta Federal Reserve Bank President Dennis Lockhart said he no longer expects an interest rate hike at the April 27th policy meeting, but he did indicate that there is still time for 2 or 3 more rate increases in 2016. What's your view? Can the Fed raise rates 2 or 3 more times in 2016?
Well, we believe he's absolutely correct. There's a very minimal chance that the Fed will raise at the April meeting. In fact, there's a 1% chance based on the financial futures markets that they'll raise at that meeting. Our feeling is that 2 to 3 rate increases is extremely unlikely. I would think maybe only 1 rate increase. And in fact, according to financial futures markets, there is a 60% chance that they'll raise rates at the December meeting. So with what we're seeing, expect only 1 rate increase this year from the Fed.
Let's touch briefly on the currency markets, Alan. The British pound continues to underperform and can't really seem to get any traction. Is this a sign of weakness, and do you have a downside target for the pound?
Well, it absolutely is a sign of weakness for the pound. Traders are centering on the June 23rd referendum for the UK to leave the European Union, and that's taking precedence over the economic reports. Of course, political uncertainty usually means lower prices, and I think that is very much the case for the pound. So with the pound now at about 142 and this referendum ahead, I think we can see a move down to the 135 to 138 level for the British pound.
And the U.S. dollar stays strong. Anything to add in regard to the U.S. greenback?
Well, the rate of increases from the Fed has slowed, at least the perception is, but still the Fed is still the most hawkish of all of the major central banks. So even though the dollar index has come off of its highs because of prospects of a slower rate of increases in rates from the Fed is still the most aggressive of all the central banks. The dollar index, I think, will stabilize here and gradually work higher.
Steve, you touched on Brazil. Over the past 2 decades, Brazil has become one of the world's largest producers of grain, particularly soybeans. There's political turmoil in Brazil, as you mentioned. What does the presidential impeachment mean to the markets?
It's interesting that the president just announced that she's going to have a press conference tonight. Some people are thinking that she might resign before they go into the impeachment trials. I think that on one hand, a lot of the Brazilian people hope that this improves their economy. On the other hand, the new vice president is not going to change anything. So it really is not going to change anything, but we'll be watching the real pretty closely because at these levels or higher, the Brazilian farmer doesn't have the incentive to increase crop productions.
And finally, Steve, we haven't talked much about China over the past few weeks. And what's the latest from China? Can you talk a little bit about their corn policy, their soybean demand, and the outlook for the Chinese economy?
This week we saw some positive data out of China that we're also seeing iron ore prices go up, steel prices go up. They had a record amount of soybeans imported in the month of March. They had large imports of crude oil. So, there's information that suggests that the economy might be getting better. This week we saw some money flowing into some of the markets because they feel the Chinese economy has bottomed. As far as the corn policy is concerned, there's no rules out there. They haven't really said what they're going to do yet, so it's not impacting the markets yet. And as far as the soybean imports are concerned, they're continuing to talk about higher hog numbers, higher demand, and that imports will continue to increase on an annual basis.
Steve, a follow-up to that question. I mean, reliability of reports that come out of China in regard to grains. What does the U.S. market feel about some of the news that comes out of China from time to time when it comes to corn policy, demand, what they will not buy?
I think there's three things. The number one thing the Chinese want to do is make sure they have a supply of food to their people. So anything bottom line will always have that in mind. Number two, they have some of the same problems that a lot of countries have. They have reduced income, higher budgets, deficits and things like that. So they're trying to get rid of the reserve stocks. It's the fourth highest cost of their entire budget. The problem is if they get rid of the grain stocks and have any weather problems, they're basically selling corn at $5.70 that they own at $10. USDA came out and said that this write-down could cost them $10 billion in money. But the other thing is that there seems to be a strong support by the Chinese government to reduce corruption, to reduce the pollution problems, and to improve their economy. And so all those things should be positive long-term to commodity markets.
Thank you both. I'd like to remind the viewers that it's April 15th, tax day here in the United States. Because it's Friday, you have until Monday at midnight to mail in or submit your returns. Remember, the opinions expressed on this video are solely the opinions of the guests and should not be construed as the opinions of ADM Investor Services or Archer Daniels Midland Company. And if you have any questions, comments, or would like to open an account with ADM Investor Services, please visit our website at www.admis.com.